the ultimate story remains the same as how the investors will get growth in this company to achieve. If whatever the work you have done starts reflecting in the numbers, automatically the investors will understand that the story is true. In my communications, I make sure that we emphasize more on the cash flows and bottom line, because that will ultimately create value in the long term.
Welcome back to another episode of Beyond the Bullpen. Today I have Digitide Solutions Head of Investor Relations. So before we, dive into a conversation with him, I would like to give a brief, introduction about him. So he's a Senior Vice President and handling investor relations and M&A at Digitide Solutions. He just joined recently. He's also a seasoned investor relations leader with about 15 years of experience in finance and capital markets overall experience. And before this, he was working at Tata Power. So overall, he combines with an experience of sell side equities and a research experience with in-house IR execution, across industrials and utilities, and is also very much skilled in earnings call management, analyst engagements, equity evaluations, capital market strategy, and communicating, transitioning narratives to investors. So this last part is something I'm very keen on discussing with him, and maybe I can also get some ideas from him through this conversation. So very much good morning, Mr. Rajesh.
Hey, hi Sanju. Thanks for having me on your podcast.
Thank you so much. Pleasure is all mine. And before we begin, Mr. Rajesh, I like to always start with, asking every single guest how is that they got into finance and what is it that intrigued them into getting into finance, and is it the knowledge? Is it, the kind of exposure? What was it?
No, definitely, initially when I joined an engineering company after completing my engineering, I saw that, my interest and inclination was towards finance. Very early in my career, I came to the conclusion that I am not going to be a very good engineer going forward, and that's where I decided, I have to look for something else. And I could clearly see myself looking at the stock markets, looking at equity investments, and I started equity investments very early in my career as an engineer as well. And what happened during 2003 2007, when I was working with SR Steel, I started investing in certain stocks, and that stocks did extremely well. At the back of the mind, I thought I am an expert investor, but it was also the bull run that was between 2003 to 2008 that had helped me. And after the GFC, there was a sharp correction, and that myth was broken. So clearly, I understood that there is more to equity valuations just than the narratives, and it is imperative for me to understand the nuances of equity investments. And that is where I decided I need to pursue an MBA. This is my passion, understanding valuations of assets in general and equities in particular. And that is where I decided that an MBA will serve the purpose that I want to follow in my life. And hence, I decided to do an MBA, and I got the admission in Asian Institute of Management in Philippines, which is one of the best college.
Amazing. So, sorry if in the middle I sometimes I get very curious, so I may sometimes cut you off.
No
Uh,
worries.
thing is, with your first investment that worked out very well, what was the research went into that versus the research you do now with companies? So, how much of deviation in the research that is, like with so much of years of experience now?
No, I clearly remembered my first stock investment was India Bulls. So it
Okay.
was this very young company at that time in 2003, which has just come at with an IPO. I clearly remember it was at 19 rupees. And in that IPO frenzy, I also applied. I did not get that. But then I did some more research. It was more superfluous research. It was nothing detailed. And I also studied that, one of the large investors, Sunil Mittal, had invested in that company. So I liked that company, and that I borrowed conviction from one of the key investors that if this investor is looking at this company very positively, then we should also look at it. And I invested it at in the company at 30 rupees. And within
Okay.
a month, it became 60 rupees.
Wow.
So I almost doubled the money in just a month, and that is how it started.
But it was
Uh,
more of here, like he has invested, so that is why you had invested.
Yes,
So
it was
it was
more of that. But now, if you see, now if you see the investment, there's a deep research that I do in any invested investments that I particularly make, and that research it includes not only studying about the company but also about the industry, what are the moats this company has, what is the management doing, what has been the historical ROEs that these companies were able to deliver, so what have been the some red flags if this in the media or in the press that we should be looking at. So all this things or all this attributes are clearly seen, and deep dive is done on all these aspects before I decide to invest.
fair, fair, fair. So, this is also something I'd like to know from you. What was one early, career mistake which now you consider as a superpower or, feel like it has
Yeah.
turned out a great thing? Which was it?
No, I think one of the things that I used to do earlier, that I used to lay a lot of emphasis on valuations. So if the
Mm.
valuations were cheap, I used to believe that there is no downfall, and there is a huge margin of safety because this valuations are already cheap. But when I started looking very deeply into the companies and the industries that I invest, or the companies that I work for, I have come to the conclusion that in India, most of the investors don't look for valuation trades. They look for long term growth, they look for quality of management, quality of business, and that is something which should be given more importance. And that is what I've learned in the past 15 years, that valuation is just one part, but the more important part is the path to growth, how much runway a company has
So
on
if we
growth.
can just, so if, sorry, if we can just like break up into percentage out of 100 marks, how many marks would you give for valuation then?
Yeah, so earlier I used to lay 80% of importance to
Oh,
valuations.
okay.
If the valuation was cheap, then everything else was okay. But now that valuation percentage is just 30 to 40% in my consideration.
Okay.
For me, the business, the management, the leadership, the governance, the pathway to growth, that is more important. And, that is also what I see in the companies that I work for.
Mm-hmm. Fair. So, if you could just send one message to your analyst desk from a decade ago, what warning or nudge would you send?
No, yeah. So I think, don't lay too much emphasis on just valuation alone, which is a mistake that many of the sell side analysts and I myself used to have done earlier. There were great companies, but, I was not comfortable with the valuations. But then, when you have a great business, a great company, the valuations would always be in a trading at a premium than what you would or normally get for not such a good company. So I think that differentiation is something that you have to understand, and that will can only come if you do a deep research on why this company is trading at these valuations and not the valuations that you are comfortable. So you
Okay.
have to do a lot of deep research to understand why is this deviation from the normal.
I would see, I would also, I remember meeting you also, and we talked about HSBC. I want to also ask a slight left field question for, for the analysts which also listen to this. How is sell side experience like? Is it as rigorous as it is today? How was it like back in the day? And how is it that, the knowledge, development happened? Should it be always so rigorous? So, how is the process like of you gaining that knowledge, how your experience like, and how it progressed for you?
No, absolutely. I think sell side is one of the best jobs a person can get, especially in their formative years. So I was very lucky to get the sell side equity research job immediately after my MBA. And I was even fortunate to work with some of the best and the smartest minds in the world who have been doing equity research. So HSBC was a great platform, and this platform had laid a foundation for me to for the IR work that I am doing currently. Actually, the foundation was made in 2010 when I joined as an equity research analyst. I think the type of research and the type of effort that goes into valuation evaluating each stock is so intense and so exhaustive that we sometimes don't appreciate that much. The markets don't appreciate the type of work the sell side do. I still remember, my day used to start at 6:30 in the morning and end at 10:30, and there was no Saturdays and Sundays. I was handling 14 companies in two sectors, metals and mining, and as well as cement. And I was doing it alone initially before I got an associate. And the type of uh, research and type of work that I used to do, it was so analytically intense that you would have to spend a large part of your working day in just thinking about the companies. And even when you're sleeping, you have this ideas flashing in your mind. This is something which the market is not understanding, or this is something I should work on. And even in your sleep, you're thinking about the company. So that was the type of work that used to happen. And this has only got more and more challenging because now I see a person covering not just 14 stock, but covering more than 20 stocks, 25 stocks. While it is good that you're covering such a broad spectrum of companies. You have so many things that you can look at from different companies, and but you have so many products to sell to the investors. However, I believe that somewhere the quality of the research just uh, just get diluted if you cover more than 15 companies. So that is the only difference I see. So for me, I have all my during my career, I had never covered more than 15 companies.
Fair, fair, fair. But over the time, but what I took away is like you still recommend this kind of a profile, like because it's so intense and it's at a young age you get to experience so much, right?
Absolutely, there's no other work better in than research is what I feel. It is like intellectually stimulating every single day. You come to the office, you're learning something new. So I would recommend it to everyone who is starting freshly and looking for which profile he should be looking at in the finance world. I think equity research is one of the best profiles that one can look at.
Amazing, amazing. We have a great advocate for that now. So now let's move on to a bit of your progression into investor relations as a function. Before we dive into that, also I want to know what is your understanding of investor relations. It's an emerging field. Not a lot of people know about it. So many listing companies, so many people out there, so many managements out there. And there is so much of so much of noise in terms of equity. So what is the investor relations function? How do you see it? How have you seen it evolve? And what's your perspective to that?
No, absolutely. That's a really pertinent question, and that actually is something I would also like to share with the audiences. Why did I make this shift from equity research, despite having such an amazing job and having a very fruitful experience with HSBC? Sanjot, I saw that there was a deep disconnect between what the management's vision is and how the markets treat them. And as a sell-side analyst, I could see that there are several dots that are can be connected to lay that bridge between the management and investors to have a smooth communication between the two. So many times management has the vision, which is very long term, but the investors are short term oriented. They want results very early, and that's where the disconnect is. For example, a company announces a large capex or does a very huge M&A, which would require that its earnings in the next few years might be dilutive. However, to if this was done without any communication or without any investor relation professional who understand this disconnect, the stock or the market value of that company will drop drastically if the communication is not well. But that is where I believe that the investor relation is a very, very strong bridge between the management and the markets, and connects them, seamlessly, so that whatever management is thinking in the short term, in the medium and long term is communicated well. And so the market not is not discouraged by such events, but in fact they appreciate that the management is moving in the right direction, and the rationale for each of the steps that management is taking. There's a clear strategic intent, and they are doing the right things to make sure that the shareholder value is created and not destroyed. So I think investor relations is a very, very important cog in the shareholder value creation wheel. And I think that importance is only increasing in India, because if you look at India, we have so many IPOs, so many companies becoming unicorn so early, and there's huge amount of interest in this market because we have one of the most stable governments. We have one of the most progressive policies. There is continuously reform happenings, and this has laid a decadal growth theme for this country. And I don't believe it's decade. It could be a multi-decade theme for India. And I see many, many companies, touching new highs, and the market cap of our overall and each of the companies increasing, and they would need someone to communicate this to the investors who are so much interested. So many times you might have a good story, but if it is not told well, it's like a movie, which had an amazing story, but its execution was not good, and hence it flopped. Similarly, there are many companies which have very good products, but unfortunately the marketing is not good, and hence the product fails. So it is not the issue of the product, it is issue of the marketing. And I think investor relations are those people who can really market the company well, can make sure that right amount of USPs are communicated to the investors, and the company gets the deserved valuation multiples that the company thinks it deserves. So I believe that investor relation professional's job is extremely critical. While earlier it was not given so much importance, it was just any other job. But I think the managements and the leaders, the promoters are all coming to the conclusion that investor relations job is a specialist job. It
Right.
is something which requires a good amount of experience and market understanding, and hence that is also reflected in the type of demand that the IR professionals are having currently.
Very, very, very elaborate and very detailed, and so much required, description that, investor relations need. Even I actually worked in investor relations myself, sometime of my career. I went into IB, then I went to VC and worked in, IR, where, I also looked at companies. So, I understand the kind of, value it brings over time. It was a nascent field, and it's turning into be like a huge giant in itself, as a function also and as a service also. But here's where I need your take on. So what is the difference between the storytelling of a company and giving it a little bit of spin? So where do we draw that fine line?
Also, Sanjot, as you know, storytelling in investor relations is very different from storytelling in movies or something else, where you don't have to back that with data,
Right.
and hence the investor relations job is very, very critical, because they have to stitch the narrative along with the data points, and that data points need to make sense to the investors. So it is not only what data points you share, but how you share them and what the investors perceive. So it is very critical to not have a story without any evidence of execution on the ground, because it would be akin to building palaces in the clouds, and that is something which the investor relations professional should clearly avoid. And hence my take would be very strong storytelling, but backed up with data and narratives, to make sure that investors are able to absorb the story.
So, can you please maybe help in explanation where the thin line would be crossed that this is something that is like giving it like a spin and it should not be. Maybe a small example if you could just help us with like ये नहीं बोलना चाहिए और ये ही बोलना चाहिए या something like that with your
No,
experience.
so, I have seen a lot of companies talking about their, uh, you know, 2030, 2040, 2050 targets,
Right.
but not having near-term, uh, you know, measures or objective data points to
Right.
qualify what will happen in the near term. So any long-term targets without any near-term pointers or parameters where the investors will be able to assess whether the long-term targets would meet or not. So the long-term target should be, uh, should not be given alone in the investor presentation. It should be measured along with the near-term targets that we have. Uh, uh, and it should be a 1 year, 2 year, 5 year theme rather than just a 10-year theme. So that is something which should be with the investor relation should be mindful about.
Fair, fair, fair. And also what would be your kind of, let's say, we have started investor relations at Digitide. Like, I mean, so what is it like the second you come in or in general, a thumb rule for any investor relations function? What are the kind of things that, one starts off with, the kind of checks and balances that needs to be there? Just a broad qualitative perspective that needs to be looked at from.
Yeah. No, so, in any IR role, I did it for Jindal Steel and Power, I did it for Tata Power, and currently in Digitide.
Right.
The first thing I tend to do is what is the market perception of the company? What are the gaps the people have about the understanding of the company, and what are they valuing on? And then, you slowly and steadily pick up those gaps and fill those. So, for example, in Tata Power, for example, when I joined, I spoke to all the 25 sell side analysts who used to cover them to
Okay.
understand what is their thought process, what are the difficulties they are having in valuing the company. And I clearly came to understanding that the company seems to be complex, and
Right.
the need of making it simple to understand for the analyst and each of the businesses main drivers is very very important, and that is the same thing I'm planning to do in Digitide. So we have just got listed. 13th of June was our listing date,
Okay.
and the
Congratulations.
first and foremost, thanks a lot, Sanjay. And the first and foremost is to make sure that this story is communicated to all the sell side analysts, all the investors they were already invested in, to make sure that what are the key queries or concern
Right.
to help allay those concerns, the steps that the company should take. So these are the initial steps that I take, and in the future, with after 30 days or 60 days, there's a clear timeline for each of these measures. you know After 60 days, we should have a analyst meet where all the analysts who cover or planning to cover the stock should meet, and they should meet the management, understand each of the businesses, and then in the long run, we should have regular meetings or regular conferences where we meet these analysts and the investors, so that we consistently reinforce the message that the company is trying to tell the investors.
So, being in utilities and now getting into tech services, there has been change in metrics because over there we used to look more at capex and regulations and stuff, and but now in tech services we are looking at more of TCVs, utilization, margin makes. So, how is that rewiring of your narrative or your the way you look at industries? How much of that absorption takes time and wanted to understand that from your what are the kind of sources you looked at?
No, so the good thing about my background as a sell side analyst was our learning curve is very very steep, and that has played out well when I joined from a huge stint in metals and mining industry to starting to cover when I started to cover cement, and from metals and cement I moved to a power company as a IR head, and now from a power and infra company, I've joined the tech service. So previously I have had the experience of switching from one industry to another, and now in the tech service, while the matrices or the parameters that we track change, the ultimate story remains the same, as how the investors will get growth in this company, how we are doing capital allocation, and how we are planning to improve the earnings. So these are things common for any sector or any company, and the way we communicate this story is what will make the difference. Although metrics may change, but the underlying story remains the same.
Fair, fair, fair. So, are we open to answer any questions about Digitide if I were to ask you?
No, sure, Sanjot. Yeah, I'll be
Fair,
happy
fair.
to answer. Yeah.
Amazing. So, what is that one thing, or one risk you think the market is over or underpricing about Digitide, and what's the story for Digitide also right there for us?
I think because we are a new company, this story is not well shared or well spoken or well communicated, because I have just joined the company, and that is my responsibility to make sure the story is communicated to everyone. Like, how many company knows that Digitide is one of the few companies in India which has AI first as a key mention everywhere. We are seeing that each of the industries will require AI processes, and it will require them to improve the efficiency and productivity of the company, and we are at the forefront of that. And hence, not many investors are aware about that. Also, we are taking a lot of steps in terms of shifting our business from more business process management into tech and digital space, and that is what we have lined up in our strategy, but that has not been well communicated, or it has not been well known by the investors. So it would be my responsibility to make sure that people understand that we have a clear target of significantly increasing our revenues from close to 350 million now to 1 billion. We have charted out a clear path of how we are going to achieve it, and now with myself on board, I think that story would be gradually communicated to all the people on the sell side as well as the buy side.
Amazing, amazing, amazing. I love that. And I would love to have a specific, Digitide also conversation with you someday. And now, coming towards you more towards, how you look at, governance and IR processes and everything, you know, how is it that you, in terms of, let's say, IR process, you want to convince a bunch of investors? This is something I would also would love to understand. Let's say you want to convince a bunch of investors, but they are not, I'm not going to say bullish, but they want to wait on it. They still want the numbers to percolate down. They still want, but you have the confidence in your company, or there's a particular interest that you have, and you want to generate that interest. So how is it that without sounding too salesy, you would want to, get that attention from them? Or is there any, I'm not going to say hack, but is there any advice on that front for professionals on that front?
I think it's very important for investor relation process to build that credibility and trust with the investors. So
Hmm.
if you try to do things very very fast and try to consider the relationship with your investor as transactional, that you please buy our stock because it is going to do good, and try to oversell, that is something which can backfire. So what investor relation professional should be doing is trying to lay his story about the company, a clear narrative of how we are going to achieve the results, and let the investors decide their timing, or whether they find this business strong enough to achieve. If whatever the work you have done starts reflecting in the numbers, automatically the investors will understand that the story is true. There is a strong credibility that has developed for an IR professional. So nothing should happen in a haste or a hurry. It should be a gradual process where you build trust, and it should not be a short-term transactional relationship that you build with the investor. It is a long-term relationship you build with each and every investor, because there would be times when things will not go according to what you believed, because the markets are very dynamic, and hence at that time the investor should also have faith in whatever the company is doing or whatever the investor relations professional is telling them. So I think it should be a gradual process rather than just just a lot of desperation being shown
Fair,
to
fair.
make investors onto that story or latch onto that stock.
Has there been any, situation where you have been where, there's a certain disclosure that you wanted to give, but, you have to be very selective in terms of your communication and you didn't go through with it, or you went through and you realized that ये नहीं देना चाहिए था. Has there been any situations, things like that?
For me, because I have been working with HSBC for more than 10 years, which is having one of the strongest compliance.
Right,
And, I've also done my CFA level 2, which has a clear understanding of, what is good ethics and good practices.
right, right.
Selective disclosure is something which is a clear no-no. And hence I remain extremely mindful about that. And any disclosure that I make, I make sure that it is well publicized, it is available to everyone before we do some meetings and talk to some investors.
So, but the thing is, IR also acts as, sometimes there can be pushbacks of, aggressive claims. Yeah, there are situations when, there can be aggressive claims and how is it that would you, look around, let's say investors are pointing fingers, right? And they're saying a management is making aggressive claims. So how do you kind of render that situation? Maybe let me put it this way.
So any aggressive claim, as I said, it is the IR's job to show them the execution on the ground and give them short-term targets. And while they may consider it aggressive, the management might be realistic. It might be realistic for the management to deliver those. So it is very important for the investors professional to bridge that gap between the markets and the management, as I told in my initial
Right.
remarks.
Fair. Fair.
So this gap can only be bridged if you give them specific targets in the near to short term, that if we are doing this, then you will see that long term story playing out. And
Hmm.
while you might find that the targets are very aggressive, just look at our results or just look at the history,
Hmm.
where we have already delivered, or there are several instances we should be highlighting that we have already achieved some of the targets.
Right. Now, this is a bit of an aggressive question from my end now. What is like kind of your checklist to avoid things like, greenwashing or tech washing with really, savvy sounding words, in presentations or in pitches. So what would be your kind of, placement of such things in front of investors?
Well, as I point out, this the investors in the markets are one of the most educated investors. They understand when the company is greenwashing or using several jargons, but there's
Right.
nothing on the back end or on the ground happening, and they would discount that right away. And I've understood it longer. There could be few investors who might get hooked on because of these words or jargons, but in the long term, it could backfire a lot for the company as well as both as well as the investors. So I think any jargon that, first and foremost, it's always simplicity is the best policy when you're communicating things to the investor. So use as less jargons as possible.
Mhm.
There are several acronyms that people use thinking it would sound very progressive, but I make it a point, each of the acronyms in my investor relations presentation is uh, explained well, and people understand actually what the acronyms are, and then try to explain the story as if you are explaining to a investor who doesn't understand this sector, or as if you're explaining it to your dad or your mother, and if they are able to understand, then of course the investors will be able to understand. Of course, then you once you understand that the investor has the basic understanding, then you go deep into each of the businesses, make help them understand the nuances, what are the drivers for each of the business segments, and what are we doing to make sure that the growth comes. So I think these are the steps that I take.
Well, love that. But also now here's where I want to ask you my personal and with industry also, I've been in the industry also, and I want to ask you this. Where investors are like, not investors in general, people here say stakeholders are like, numbers do the job themselves. So or number sells the company themselves. Usually investor relations as a function is very optional. So what is your take or your counter example, from your career, or how is it that you want to tell managements, or you look at, this kind of a statement which is being passed, like good numbers sell themselves, so there's not much of requirement for IR.
And also, it is similar to the point that I made. Just having a good product is not the final thing. For a product to be successful, the marketing is very important, the awareness is very important. What are the USPs? So it's like saying, I am confident about the product, it will sell by itself. No product sells by itself. And that is where the marketing or the brands are formed. And hence investor relation is a brand ambassador for the company. They are the ones who explain to the investors, what are the key USPs of the company, what are the themes that we are working on, what are the strategy we have for the long term, and how we are taking steps to make sure that we execute those strategies. So I think, just numbers alone won't do the thing. That numbers should be stitched well with the narrative and storytelling, and also it should be continuously effort should be made to communicate it with the broader audience, because you might have a good story, but if it is not told, or if it's no
Absolutely.
people are hearing it, it doesn't make any sense for.
So when it comes to things like now I remember there was a time in the markets close to a year and a half back, where everyone was looking at top line growth and not bottom line growth. As long as the stocks are growing that way, I mean, all investors are like, oh great, we're going to buy it. So in this kind of world that we have seen a change in, the sentiment that has changed, are we now moving towards a place where guidance is slowing down? Or how much of weightage still guidances have? And this is not just like sales guidance. I mean, you can throw light there, but how is it that you want to play it? Like, what is the kind of guidance then changes? Are we still looking at order books? Are we still looking at bottom lines or costs? What is it that we are looking at now?
Absolutely, Sanju. That's a very pertinent questions, given where the markets are globally, as well as but there are also perception that the markets are trading at very high multiples. Uh, and hence, we are seeing several IPOs coming, several promoters offloading their stake. But, as all economic cycles, even the market have their own cycles, and it goes through a cycle. And these things tend to come up in a very good bull cycle. And but one should be very very mindful that it is not the top line which the investors value in the long run. It is the bottom line and cash flows. So I personally, in my communications, I make sure that we emphasize more on the cash flows and bottom line, because that will ultimately create value in the long term. While you might see short term uh, euphoria in some stocks because of the revenue growth, but if it is not translating into bottom line or PAT growth, this euphoria won't last for long.
Oh, and what is the most heard word, buzzword right now in the markets that you may have come across?
So, as I think what is the buzzword is, any good company is fine at any valuation. So if there is a good company, you should buy it at any valuation, is something that was a myth. I think that myth has been broken. We have seen several good companies for a long time trading at significantly high valuations, but now with the growth declining, we are seeing time as well as derating of time correction as well as derating of those companies. So I think uh, a good company is good, but valuations also matter. So we should be mindful of that any amount of growth is not going to last, because once the base is created, the growth tends to come down. So we should be mindful that any growth, short term may be very very high, but in the long term there is going to be a base effect that will catch up.
Right. So right now we are also in an AI everywhere in narrative, right? So how is it that you show investors that you are serious? I mean, it can be any company which is saying AI for that matter. So what are the proof points, or what are the metrics or dashboards or anything that you feel that, or you look at things and that can be really, really tracked on by investors?
No, absolutely. So, Sanjot, while AI has been used very loosely by several companies, I think the investors need to look deep into what exactly a company is doing in this field. As I said, Digitide is at the forefront of making those changes, because we are into business process outsourcing earlier, and one of the key requirements of business process outsourcing is to improve the productivity and efficiency for our customers. And I think AI does it well, and hence it is very natural for us to come up with products which have AI platforms that can help the companies improve their efficiency and productivity. So we are already doing that, and we already have several AI products which are in play. So it's not just talking about it, but we also have products which are backed by what we are talking. So hence, the investors have to be extremely mindful of whether the company is only talking, but there is no walking. So you should always walk the talk.
Hmm. What is the like a biggest rookie mistake in making, investor presentations that you feel?
The rookie mistake, I think, is something is not uh, fact fact checking. If the facts are not accurate, these are clear no go, because uh, if your presentation has even one factual error which is caught very easily, your credibility goes for a toss. So it is very important to not only have the data points there, but also taking the time out to check the source of the data, and whether that this data is making sense or not. So I think there are several factual inaccuracies which go in the presentation, which I think is a rookie error.
So I want to also take this opportunity to, discuss a case study with you. I personally worked on once upon a time. I can't take the name. It was a very big EV company that didn't play out well for them. And thing is, in terms of the question is more about narrative building, right? There will be companies about quarter on quarter, they change narratives or they try to shift narratives from as per how their peers are playing, or the peers are, let's say, performing better than them, or their numbers are improving more than them, or certain return ratios nahi to profitability ratios are improving, but they are not. So they will try to switch the narrative a bit. So instead of segment A, they will talk about segment B, and we are more bullish towards segment B, and our revenue mix is also changing as per that. So I want to ask you that, um, in terms of narrative building, of course, this is wrong, and of course, this is not sustainable. But how much of energy needs to be given to narratives A, and where does the management also should draw a thin line between, let's focus on the business more rather than, or improving the business more, and rather than, keep switching revenue mixes, or quicks, or switch themes as per the basis of how investors are looking at.
Sanjot, so I always believe in the power of three C's, which is clarity, consistency, and credibility. So if you keep switching the narratives, or keep switching the way you were displaying your information, I think the credibility goes down. There's no consistency, and there's confusion. It actually goes against all the three principles that I just spoke about. And hence, for me, any communication should be consistent, irrespective of whether it is a good or a bad thing. Because if you believe in certain things, in the long run, if they are going to improve, there could be phases of slowdown or a low growth period, which is fine with investors. They're fine with it because they understand things work in cycles. But they are more interested in what are you doing to mitigate those risks, what are you doing to make sure that this cycle reverses. And hence, that narrative, just leaving aside those narrative, is not the way around. It is about explaining that what we are doing to help improve some of the segments which are not performing, rather than just keeping it aside.
Right. I have, last final few questions which are really hard hitting. Like, what are the things right now in investor relations as a metric on the street, which is, both overrated and also an underrated also that you feel?
No, I think one metric that is very underrated, I think, is ROEs.
Okay.
Not many people, and overrated is again, revenue growth. So, when I see very high, some of the companies trading at stratospheric levels of valuation, just because they are seeing very strong revenue growth, but there is no profitability, or the ROEs are depressed. That is something which really, something that I don't relate to. I If a company is growing stable revenues but has a very strong ROEs, that is the returns that they make for the capital that they invest, and hence that is a metric that everyone should be watching very closely. So, as you pointed out, the revenue growth alone is something which I find overrated, and ROEs are something which is underrated.
Hmm. And which is actually tougher, persuading regulators, during a utility down cycle, or persuading growth investors to, invest in a tech reset company, and why?
No, I think there are challenges in both. A utility company has a regulation overhangs always, and but I think investors are smart enough to understand that if there are market forces which are not under management control, they are fine with it. It's again, it is what the management is doing in this change scenario or change regulation that is more important to the investors, because you can't fight market forces too much, or regulatory headwinds too much. You have to come out with ways to adjust to those change dynamics. Similarly, in a tech industry, it is continuously evolving, and hence, to provide growth which is not only one time but sustainable is something of a challenge to explain to the investors. And hence, the management should also be mindful to make sure that whatever uh, aspirations we have in our tech and digital space is something that is sustainable and provides a long term growth for the investors, not just a short term blip.
Yeah, I had another case study that, a client that I was working with, tech company, and they were looking at, they were trying to say, let's say they are company A, and there is a company B. Company B is a mid cap, company A is a small cap. So the positioning was they are going to be the next company B with XYZ kind of moat. Now, which is fair, and I remember having the discussion also with you, saying ki, don't tell the investors that we are going to be the next this. Now, let the investors decide by itself. So the push was to always position themselves as company B, and we are trying to be that. And in order to do that, to change the complete narrative of, instead of looking it from a PE ratio, look at it from more of, price to sales ratio. But investors were smart eventually. They were like, but company B, is much more cash generating, and look at the cash reserves it has and the free cash flow it has generated, versus company A, no matter how you position it, is still going to be that. So, how is it that you want to, share your insights on why is it and how is it that, such kind of plays won't work out, and the kind of tricks that, IR should stay away from also.
No, absolutely. As I said, the first and foremost is that you are dealing with very, very intellectually uh, good or smart
No,
people.
sorry. Also, one more thing in that, don't you think so? There is only then much a limited flexibility than the IR has, because the business model needs to be extremely good also, right? At the same time, because the IR can't, shift or break the business model and say things, different things. So there is a very limited, play on that front. So what is your thought in
No, I
to it?
think each business is very unique, and
Mm.
there would be certain pockets of strength that your company has. So as we do with SWOT analysis, strength and weaknesses and opportunities. So each company would have its own strength and some weaknesses. So, as an IR professional, it is not just a one-way street of telling the investors about the strength, but it is also about IR communicating that these are the weaknesses that a company has, and this is how we are perceived by the markets. So, come up with some plans to address those weaknesses.
Mm.
So, we are not only making sure our strengths get more amplified, but also our weaknesses are addressed. So that is something an IR can do. So as I said, each company is unique. They would be having certain strengths in certain areas, and they would be in the markets which are doing so good that they would keep on doing well. So talk about the industry or the sectors where which is seeing some tailwinds, and how this company is placed to benefit from those tailwinds, or talk about strengths and how you can, even if there are headwinds in the industry, you will keep gaining market share.
Now, last two questions, before we end our fruitful discussion, Mr. Rajesh. So, one question is, if you had to change one rule about SEBI and to make it, to increase the integrity of the markets, this is also something I usually like to understand from people. What would it be, or how would you change regulations overall as general for capital market participants or investors?
No, I think SEBI. So it is mandatory for all the companies to have a annual report, and which is something which should also happen in the quarterly earnings also. Currently the requirement is we should have cash flow statement only in 6 months. Or there is no requirement for having a quarterly presentation. You can just have a press release. I think if SEBI could make it mandatory for not a 6 monthly cash flow and balance sheet, but also quarterly cash flows and balance sheet, that would give more improved disclosures for the companies, and it would give the right uh, information to the investors. And also there should be quarterly presentations, if not quarterly, at least 6 months. There should be one presentation by the company where people can understand, because there are several good companies, but because of lack of investor relations professional, or no presentations which can explain the company very well. I think if SEBI can make it mandatory for the companies to come up with good presentation, not like good is a very qualitative, but presentation which helps investors understand, some template that these things should be covered in the presentations. I think it will make life for a lot of investors very easy. And also the quarterly balance sheet as well as cash flow, if that is made mandatory, I know it is it's very difficult and challenging for the companies to do that. But I think all good things are difficult at the beginning, and we tend to get long term advantages if we keep on doing those difficult things. So I think these are the two changes which I believe could make life of investors very easy. It will make the life of IR professionals difficult, but that's fine.
No, fair. I understand completely. And the last question is, it's going to be a tricky one. So let's say there is certain, professional belief that you had to unlearn. So first would be, what is the professional belief that you have had in the past 5 years, 5, 6 years, as long as you've worked, that you had to unlearn? And second is, within that, how have, the learning that you had to unlearn, what is that? What is it? How would you like to apply it, and kind of make your mark in the field of investor relations, and as a strategy maker, and as a, lead in, M&A spaces?
No, I think what I would like to unlearn is, as I said initially, also, I am a deep value uh, seeker, and I used to give a lot of emphasis on valuation of a company. That is something which I have already trying to unlearn. Also, from an initial, as I said, in my initial remarks, from a huge weight of 70 to 80% on valuations, I have brought it down to 30 to 40%. I've started giving more emphasis on the uh, growth pathway that a company would have, the leadership that it has, the type of returns it has made on its capital investments, and the corporate governance standards. I think these are very, very important for companies in the emerging markets. And I think if some companies want to, or if some investors want to unlearn something, I think too much emphasis on valuation and not on these business fundamentals or moats is something that should be taken into consideration.
And the kind of, mark you would like to leave
So,
by
as I
the end
said,
of...
just focus on three C's: consistency, clarity, and credibility. As an investor relations professional, and you will do well.
Bonus question. Any last final advice for upcoming early analyst associates in the field of, be it finance, anywhere in the field of finance, where they find it long hours, tough grilling work, and a lot of mental crunching?
No, I think take it as an opportunity rather than considering it a burden, because this would lay platform for the future. And don't shy away from working long hours, and which is what I did, 13 14 hours of work, but it laid such a strong platform, and the fruits of that are something that I'm enjoying now. So I think don't shy away from learning new things, even if that needs you to put in more hours. That's fine. Any type of learning should be taken with, should opportunity should be grabbed with both hands.
Hmm. Fair. Thank you, Mr. Rajesh. And it was genuinely very, it was like a very, I was genuinely very happy to speak about IR, and talk about the changing perspectives and overall industry of IR. And I remember having this chat with you also, and you'd want to throw some light on more on the space. And of course, someday I would like to also talk about specifically of Digitide, and I would love to cover the company also in terms of having a podcast, and I would love to have that opportunity also.
No, definitely, Sanjot. As I said, I would love the story of Digitide to get communicated to several of your uh, audience and the participants that would be watching our podcast. I think it is a extremely compelling story, and it's just a matter of time when the story is known by lots of people. And I have taken up this responsibility to make sure that it reaches the audiences, and not only some selected audiences, but as many people as possible. And this your medium is also one of the uh, your podcast is also one of the mediums with through which I am doing this. So
Amazing,
thanks
amazing,
for giving me this platform, Sanjot. Yeah,
amazing. Thank you, everyone. Thank you for listening, and thank you for watching. Thank you, Mr. Rajesh. I will see you again next time.
sure. Thanks. Bye bye.
Thanks. Bye bye.